Hey everyone, welcome to the channel where we unlock the secrets of trading one chart at a time. Today we're diving into one of the most powerful tools in a trader's arsenal, the footprint chart. If you ever felt like you're missing a piece of the puzzle while trading, then you need to know about footprint charts. These aren't your typical bar or line charts, no, footprint charts that you see inside the bar, providing a deeper understanding of market dynamics and order flow. We're going to walk through what a footprint chart is, how to read it, and most important, how you can use it to spot trends, reversals, and key levels of support and resistance. So by the end of this video, you will not only grasp how footprint chart works, but also gain insights that could transform the way you trade. So if you're ready to step up your trading game, smash that like button, hit subscribe, and let's get started. Alright, let's break down how future markets work in this flow chart. Think of the futures market as a place where people trade promises about future transactions, to put it very simply. Firstly, we have a buyer. This person believes that the price of its asset, like gold or metal, will go up in the future. So they enter a futures contract, agreeing to buy that commodity at a set price on a specific date down the line, like this. So this is the heart of the action. This is the futures contract. It's a legal agreement to trade an asset, and it includes all the details, the quantity, the price, and when the trade will happen. On the other hand, we have the seller. This person thinks the price of the asset will go down, so they agree to sell it at the same set price and date as the buyer. That is actually all. So if the buyer is right and the price goes up, the buyer makes a profit because they bought at a lower price than they locked in. But if the market drops down below the price, the buyer is at a loss. Same goes for the seller. The seller thinks the asset will be less worth. So if the price drops, he is in the profit. If the price shoots back up past his selling price, then he is at a loss. It's as simple as it can be. There you have it. That's the futures market. Buyers and sellers are locking in prices for futures trades, each betting on where they think the market will go. It's all about speculation and protection. So whether you're aiming to hedge your bets or looking for a profit, understanding this flow chart is the first step into the world of futures trading. So of course there is a lot more to see in the futures market than just the buying and selling, but let's keep that for another while and let's just focus today on the footprint charts. First, let me give you a small introduction to candlesticks. Normally everybody would know what this is. So a candlestick, this is a bullish candlestick, this is a bearish candlestick. So everybody knows the open. We get some selling in, buyers take over, we push price up. And here the buyers take over, we push price down, and we get a close. The next candlestick will start at the close of our previous candlestick. So we have the open, buyers step in. Here sellers step in, we go back down, and we have a close. This is basically a candlestick, and this is basically how most people read the market. They make patterns out of this candlestick and they try to inform themselves like that. Now there is another way, and that is what we call the footprint chart. So firstly, we have to understand that there's two kinds of sellers in the futures market. We have the passive and the aggressive participants. So if we look at a DOM, I will explain a DOM later. A DOM represents the passive buyers or sellers. So we have a price ladder like this, where we have some prices, 7, 6, 5, 4. And we have some sellers sitting here, like we have 2 sellers at 8, we have 3 sellers at 7, and we have 4 sellers at 6. And then we have some buyers. We have, let's say, 3 buyers at 5 and 3 buyers at 4. These are all passive buyers. So if they don't move anything, price will not move. So on this side we have the sell side. On this side we have the buy side. So here's 3 people waiting to buy a futures contract for $5. Here's 3 people waiting to buy a contract for $4. Here is 4 people waiting to sell the contract at $6. For the market to move, one of these 2 parties has to make an aggressive order. So one of these people, like for example, this seller, has to step up and actively buy a contract here, leaving this with 2 contracts and 3 contracts here. This is how we can watch price fluctuate on a DOM. So here we see a DOM in working. So here we have the ask or the passive sellers, and on the left we have the bid or the passive buyers. Here you see the price ladder. Every tick on the ES market is represented, and every buyer at every price is representative. If there is no aggressive buying, the price will stall and will just keep remaining the same. For the price to go down, people have to actively sell prices on this ladder. Easy. Now to introduce the footprint chart. So here we have a normal candlestick chart, and this footprint chart, it represents the same thing, only we can see inside of the candlestick. So it is the same representation. We only see the data collected by buying and selling. Now just the opposite of the DOM, and that's something we have to keep in mind. This side is the aggressive selling, and this side is the aggressive buying. On the DOM we have the passive buying and selling. So here's where the aggressive selling and buying happens. So we can exactly see how many contracts are traded at what price. It is very simple. Now, do we look at every price at every tick? No, we don't. We actually only check the extremes, like here, imbalances, like this one. These are abnormalities in the market. Here's no sellers at all. And we are looking for extremely high orders. Let's say this block is a little higher. So we watch those things, that data, like this one, this jumps out into my eye. So there's a lot of buyers here at the open, which pushes the candlestick up. Then we have a lot of buyers right here, which pushes the candlestick eventually further up. So we call this the bid. These are market orders that hit the bid. These are the sellers, and market orders that lift the offer are on the right side. These are the buyers. Now, as I said before, what are we looking for exactly? We are looking for these imbalances. Whoa, what is this? We are looking for these kind of imbalances like this and like this. This is what gives us the reason to believe that price is pushing up or down. An imbalance is nothing more than just 4 times, depending on your software. Mine is locked in at 4 times the amount of buying, and here the same 4 times the amount of selling. We call this a buy imbalance, and we call this a sell imbalance. There's all different kinds of footprint charts. So we have a volume footprint chart, we have the bid and ask footprint chart, which is the normal chart. We have a delta footprint chart, we have a volume profile footprint chart, and we have imbalances charts. I have a sort of a mixture on my chart. So I have the profile, delta, bid and ask, and imbalance all in one footprint on my chart. Let's step in with a little live data. So let's dive into some live charts. These are 5-minute volumetric charts by NinjaTrader. I am not affiliated with NinjaTrader in any way. I just like the software. So let's zoom in for a bit. So what can we see on a footprint chart? It is very easy. We can see the normal candlesticks, left to right, like here. And then we can see the numbers, and the purple numbers are selling imbalances, and the blue numbers are buying imbalances. Of course, this is a very basic footprint chart with not a lot of special features on it. I don't like to trade timed footprint charts as well. I like to trade ranged footprint charts. So what we can see here on this reversal, for example, we can see, firstly, we can see a lot of buying going on here, represented by the green delta. Then price goes down. Buyers are stepping in right here by its buying imbalances. On that same price next to it, sellers are still stepping up right here. Selling happens, still some selling imbalances. Buyers come in, and we push back up. See this close here and it's open here. We push down and we get some buying at 4796. We get some buying. We get some buying imbalances as well. We get less and less selling imbalances. Price opens, shoots down, get some buying imbalances as well. So we know that this zone is an interesting zone of buying and selling. So we keep that zone in mind. And when eventually price goes down again here, we only have one selling imbalance with a lot of buying behind it. And the buying power comes up here. You will see no more selling imbalances along the way, or almost none, only buying imbalances, more and more buying. So it's a pretty good indication that price is going up. So that is a pretty easy understanding of the footprint chart. I hope that helped you. If you have any questions, don't hesitate to put them in the comments, and I'll be seeing you some other time.